Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on Valentine's Day, February 14th. Just a quick housekeeping note, Monday is a holiday, President's Day for the market and for our offices, so we'll be back at it again on Tuesday. In terms of the market overall, nothing has really officially changed. We're still range bound in the major indexes, not a ton of stocks hitting new highs, and just most things we look at just pretty neutral. Even some of the secondary evidence, kind of not really super bullish, not really bearish, just kind of stuck in the middle or mixed one way or the other. I will say under the hood, though, there has been more and more encouraging things. This week we saw another round of bad, quote unquote, bad headline news with a hotter than expected inflation report. Reciprocal tariffs, I think, are being put on or were put on. Of course, last week there was the Mexico, Canada, China tariff stuff. Then before that it was DeepSeek, but the market's been holding in there pretty well. Plus, among individual stocks, there's definitely more stocks either trying to or actually breaking out on the upside than breaking down. And I would say so far earnings season has really been, it's not 1999, but there's definitely been more good than bad out there. So I'm still relatively close to shore. I still see a lot of sort of news driven kind of one-time action. Not really like, the institutions are really piling in. But I would say the evidence has been sort of gradually doing better. And I would say the real test here will be the next couple of weeks, which actually are seasonally unfavorable. But if the market can kind of come in next week after the holiday and really push higher, and we get the indexes to new highs, we get more stocks hitting new highs and growth stocks, following through on the upside, that would be very encouraging. Not that I'm, waiting for every stock to go up 20% before buying, but you'd like to see a little bit more unified action on the upside, in my opinion, before getting too aggressive. In Cabot Growth Investors model portfolio, we did more like rejiggering this week. A couple of partial profits, one on strength, one on weakness, a couple of small new buys. We're still about, I'd say, 40 to 45% cash, but I'd like to put a slug of that to work again. I think the key will be here in the days ahead. Now that we're sort of testing the range again, we've withstood the bad news again. Can we finally punch through there, and can more stocks join the party? Okay. All right, let's hop into the charts. As usual, I'm using a program called Market Surge. It's a product of Investors Business Daily. You can learn more at marketsurge.com. As always, starting with the major indexes, this is what I'm talking about. If you just went away for the week or came back a couple weeks ago, or from a few weeks ago anyway, we're still kind of bobbing in between this 19 to 20,000 range on the NASDAQ. I will say, though, that most growth measures and the big cap indexes, as we'll take a look at, they're right near the top of the range. And just recently you've had this was the DeepSeek shakeout here. This was the Mexico, China, all that, Canada tariff threat. And then this right here was the hotter than expected CPI report this week, all of which were, quote, bad news, all of which, gapped down and found buying. And so at some point you kind of say, if the market wanted to go down, it could, you know what I mean? And so far it hasn't. So I do find the action encouraging. Same sort of thing for the S&P 500, which might be, well, not quite, but it's basically just right at, new highs, right at the top of the range. And the question is, do we come in next week and, hey, it's the top of the range, so do we just come back down here? Same thing with the NASDAQ, or can we finally sort of push through? Or maybe we shake out for a day or two, another shakeout for a day or two, and then get going. But overall neutral, but certainly testing the top end of the range, okay? I will say the other, the broad market isn't as strong. Well, actually, let me just say the New York Composite looks pretty good, similar to NASDAQ S&P, near the top of the range. I will say the broad market, not quite as good. This is small caps. You can just see kind of dead in the water. Mid caps, a little bit better, but still nothing doing. And even if you look at stuff like, this is the equal RSP, so the equal weighted S&P 500. Again, a little bit of resilience here with some of these shakeouts of late, but nothing really, there's nothing doing. I mean, it's just kind of no progress since early October at this point. I wouldn't say it's, bad. It's just sort of, again, right in the middle, okay? So more good than bad, but again, you'd like to see some strength here, a couple of good days, like see the big cap indexes pop out of there, and leading stocks join the parade. Another small encouraging thing would be, again, this is the IPO fund, which is it's just basically a very, very general risk-on measure. It tested the top end of the range. It's come down, sort of neutral in here. The equal weight NASDAQ 100 actually popping out to new highs, though. Something like the IBD 50 index, not quite as strong, but starting to pick up steam. So the pieces are in place, in my opinion. You just want to see it. You know what I mean? So I think the time seems about right. It's been about 8, 9, 10, 11 weeks, depending on the stock and the index and the group you're looking at. So the time is right in terms of sentiment kind of coming in and some of the weak hands getting worn out, at least on an intermediate term basis. But now you just want to see the proof, the institutions actually step up and buy, okay? In terms of beyond the major indexes, a couple of things. One is interest rates, which is interesting. I mentioned this last week. This is the 10-year note yield. So here's your first test. This was back in November, December of the 50-day line, rising 50-day line, so which would be quote unquote bad, right? Rising interest rates. And we've pulled back in here, and here's your second test. And it looked like this was on the inflation report, the CPI report. It looked like, okay, here you go. Here's another test. Now we got rising interest rates. Could be a problem. And the last 2 days have really come off. Now, today, it's supposedly because there's a weak economic report, which I guess could be bad. But either way, just taking it for what it is kind of interesting action. And if we do get some downside follow through here, it could be meaningful for the market. We'll see how it plays out. But so far, I would say, again, interest rates are kind of where a lot of other things are on an intermediate term basis. Kind of neutral here, near the 50-day line, kind of hacking around. We'll see how it goes, all right? In terms of just sectors, we'll look at XLP in a second. I just want to mention, this is the IAI, which is it's a thinly traded ETF, but it's the broker-dealer index. So it's kind of like bull market stocks, although, a lot of them are bigger and stuff. Not necessarily that I would be buying them. But I kind of mentioned financials last week, and this is even a more direct play on it, right? Broker-dealers, not just big banks. New highs here. It's, again, there's more and more, like I can't show you the near-term sentiment stuff like AAII on Market Surge, but and it's very secondary anyway. But that has really come down in terms of sentiment. So there's more and more sort of anecdotal evidence that like, hey, this consolidation maybe has gone on long enough. We'll see how it goes. One thing I will be watching, we have seen a pickup here. This is XLP, so it's at a big decline, and so at this point I'm not freaking out about it. I would say if the market got going, quote unquote, the indexes got going, and we started to see this almost lead the way higher, that would probably be more of a yellow flag for the market. Actually, I'd be almost a little bit more worried. At this point, I'm not going there yet, but as always, I do keep an eye on this almost daily, especially vis-a-vis sort of the NASDAQ and some of these other growth measures we're watching, just to see if money's really flowing into the defensive stuff. So far, there's been a little bit of a comeback. I would say like a lot of things, the next couple of weeks will be key, okay? In terms of individual stocks, the most bullish thing I would say is that there's just been a lot of positive earnings reaction. So there's been a lot of stocks that look iffy and like, oh, geez, I'm not sure if I want to hold this into earnings, and then they react positively. And of course, there's been some potholes too, no doubt about it. But the number of breakdowns and stuff has been relatively small compared to the number of gap ups. Some of those gap ups have seen selling. It might gap up 20 points, and a few days later, it's only, quote unquote, only up 8. But up is good, okay? So just running through some names. Now, this is AppLovin. Now, full disclosure, we've had this for a while. We took some more partial profits out of it yesterday, okay, as it faded. But you're just seeing, like, even in a name like this, which has gone up, 1,000,000% and consolidated here, a big volume break, and then pretty nice so far as I record this, pretty nice follow through, which obviously would be new closing highs here. Okay, there's a lot of names like this. Take-Two Interactive is another one, gapped up. I think I mentioned this last week. Really nice long-term. It's not, so it's, when you look at this chart, it's kind of compressed. You're like, it's not really a big mover. Some of these video game names, they are it's a $37 billion market cap, but they can trend, okay? And they have a bunch of new releases this year. It's almost like a product cycle thing in the old days when someone's going to release a new computer or new software and everyone has to update and it's going to drive earnings higher. It's kind of like that with Take-Two. And just a really nice breakout on some of the biggest volume it's had in over a year and holding in there pretty nicely, TTWO. Dutch Brothers, which we've mentioned, kind of kicking myself. We've had this in top 10, but been watching it in Growth Investor, never pulled the trigger. But it really was, you go back here and it was just hard to trust it, I guess. Every time it looked like it was trying to get going, never really could, and then it had this huge gap, and that really changed the character of the stock. Ever since then, it's been acting well. And then on the daily chart here, you can see gapped up. Now again, the pattern has been, there haven't been many gap and go names, meaning, the stock is doing this, right? And then it gaps up here and it just goes. There haven't been many that I've seen, at least that fit my sort of criteria. There's been a lot of sort of gap, and then it kind of comes in, and then it might go higher, that sort of thing. So let's just see what happens here. Maybe it chills out for a few weeks and provides an entry point, but at this point, looks pretty good. Robinhood's another one. This one's been really since back in early November. It broke out, call it $30 or whatever. So it's pretty much doubled since then. So you're not early, but again, you're just seeing more. I mean, just in terms of a market interpretation, I'm just seeing a lot of stocks that are gapping on earnings. That number one is, a sign of, sentiment for the market in a good way. And number two, if they do pull back, shake out, consolidate for a couple weeks, say I'm wrong, say the market pulls back here the next couple weeks, maybe some of these things that have gapped up, they pull back, but they pull back normally. They shake some people out. 25-day line catches up, something like Hood, something like maybe AppLovin, maybe some of these things that are extended can pull into moving averages, okay? Some medical names, it's very mixed out there. Even within groups, you're seeing some stuff strong, some stuff weak, all within the same group. This is AXSM Therapeutics. This was in top 10 maybe 3 or 4 weeks ago, AXSM. They settled a patent dispute. They still have earnings next week, but they settled a patent dispute, which caused the big move. So this wasn't an earnings gap, but pretty similar. And this is coming after kind of a nice shakeout in, this was December, January shakeout, and just really stormed back with obviously good volume here. Again, you're extended, but it's holding here. So maybe you get some sort of dip here after earnings, a reasonable dip, to provide an entry point, but that looks pretty good. On the slower, steadier side, this is Gilead, GILD. Pretty big, looks like it's going to be a pretty big year of growth here for at least on the bottom line here. It's not a fast growing company, but you can just see some of these slower, steadier names that have a little bit of a catalyst can get going and trend. Not saying it's going to double or triple, but maybe it goes up quite nicely. And you can see this has been a gap, and so far a gap and go. We'll see how it plays out, but nice move above the century mark there. The AI infrastructure stuff, I still watch. They're still mostly, like this is this is Astera Labs. Most of these things are just broken, at least intermediate term. Obviously, this was the DeepSeek news, and then it rallied back, and now it's pretty much given back all that rally. Okay, Marvel Technology, MRVL. This was the DeepSeek crash, basically. Rallied back, actually looked pretty good, but since then it's just given it all back, okay? Maybe this is a bottom for me, but all I can say is this, when the stock is going up and down 20% every week or two, it's usually not proper. I mean, it's good when it's up, but like if it's going up and down, it's kind of out of control. That said, if the group does come under control, I just like to keep an eye on relative strength. So Celestica, this is CLS, crash, came back after earnings, a lot of big volume there. And it's starting to steady itself, okay? So it's pulled back, it's still volatile, but you'd love to see these things do this for another week or two and just steady themselves and kind of come under control. And then sort of a newer name is NBIS. It's a very odd story. It used to be Yandex, which was like a Russian search company, but they stripped the Russian stuff out of it. Anyway, it's a big and growing cloud infrastructure player, okay, and AI infrastructure. And just, NVIDIA bought some. It was just released today that Soros had bought some or whatever. So it's up today. Again, the stock is super wild, but, I'm just keeping an eye on for some sort of shakeout or pullbacks there. Software names, again, some positive earnings reactions. This is Atlassian, TEAM, gapped. Again, you're not seeing the gap and go situation where it's like boom, 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 and you're just begging for a pullback. A lot of these things do, so far, have been letting people in, but pretty tidy pullback. I mean, no selling volume or anything that we've seen to this point. We'll see how it goes. Monday.com. I wouldn't say this one's truly, it kind of tagged new high ground here. This is MNDY. Big volume, great earnings report, so on and so forth. The RP line never quite got there, and it has been, again, pulling back here. So we'll see how it goes. But there's more and more software names that are acting well. In the payment side, AFRM, I think I mentioned this last week. Nice. This is a crazy name too. I mean, in terms of volatility, I mean, just when you look at the weekly chart, the stock, gets cut in half when it's bad, doubles when it's good, that sort of thing. But this consolidation, pretty reasonable, okay, sharp but reasonable, and the stock's really acted well since earnings up here. Okay, followed through a little bit and just holding very, very firm. No pun intended, but AFRM looks pretty good too. Shopify, this is a sort of a bigger cap name. Shopify's been, this is exactly what we've seen. I'm showing you things that look, obviously good. This is exactly what we've seen a lot. So the stock had this big gap, almost 10 times average volume. This was an initial base, just to kind of go back in time. Huge consolidation. Just as an aside, I saw a lot of these pandemic winners that got killed. They had a nice comeback for a year or two, and then they had this big, maybe 6 to 9 month consolidation, if not longer, last year, with a pretty big correction, almost to like reset everything in the big picture. Then it broke out. Now, of course, growth stocks ran into trouble, not to go on story time too much. So it built this sort of double bottom base. And then you can see 120. You can see as it approaches that high, like resistance, gets back up there, resistance, gets back up there, resistance. It has a wild day on earnings. Okay, but now we'll see how it goes. But the reason I'm mentioning it here is that, yesterday it kind of finally, trying to punch through here. This might be a play, and some of these names might be plays where it, almost stretches its legs and then pulls back a little bit. But it looks like it's finally trying to break through that resistance, for good. Okay, so Shopify's a name. And then last but not least, I just want to mention a couple of, like China. I get it. It's hard to trust. There's going to be probably some sort of trade war, or at least headlines about it for the next many years, I would think. But, I will say that, actually, I'll just mention, let's look at FXI first. Okay. What's interesting about China is, number one, it's been dead dead as a doornail for a while. Number two is last year, I want to say it was August, September, was this big rush. That's when September, October, I guess, that's when they announced the, basically a huge stimulus package, we'll call it that, okay? Both monetarily, I think fiscally, stuff like that. And then it came in, and now usually what happens, you have that big sort of almost off the bottom move, and then now it's kind of built this reasonable base here, and it's starting to accelerate higher. Do I trust China? No. I mean, it's hard to. They'll change the rules, but we're seeing some smaller names do really well, but even like an Alibaba, they got earnings next week on February 20th, so we'll see what happens, and the stock has just gone from 80 to 120. But after, again, just years of, obviously it came down in the bear market, and just years of nothingness, it's kind of interesting to me as sort of a turnaround play. So I don't know, keep an open mind. I'm keeping an open mind. Maybe China can have a run. And these things often go contrary. Usually, gun stocks do well when the president doesn't want gun sales or something like that. So don't let the news affect it. Look at the chart and look at the numbers, and we'll see how it goes. Obviously, they're out of favor, so there could be a lot of buying pressure going forward. Back to the market, like I said, still neutral. And I'm not a breakout guy in the indexes, but until you can get going in any sustainable way, you're still going sideways. So it's encouraging here. But again, we're just kind of back up to this 20,000 area. Maybe we have to come back down a couple more times. I know the next couple of weeks are kind of seasonably unfavorable. I'm not a big seasonal trader, but just something to be aware of. So we'll see how it goes. But I will say the fact that if we had been having a bunch of good news now, and everyone was saying the economy's great and inflation battle has been won, and everything's perfect with AI, and there's no tariffs and tax cuts or whatever, and we couldn't get going, I'd be a little bit more worried. Sentiment wise, though, the fact that we've had these tests on bad news, not to mention just the regular tests, the selling that we saw in December and early January, I think is a pretty good sign that the market is willing to go higher here as long as a few things clear up. So I'm keeping an open mind. I see a lot more stocks now that are enticing than I did, say, a month ago, as they've sort of built these consolidations. Now it's just a matter of seeing more of them sort of kick into gear on the upside. Okay, that's all the time I have for today. Thanks for watching. Be sure to come by again next week for another Cabot Weekly Review.